Crucial insights, engaging conversation, no holds barred opinion. Susan Lee and Bernie Lowe, Squawk Box, live from Hong Kong. You can't afford to miss it. Weeknights at 1 a.m. CNBC, first in business worldwide. CNBC, first in business worldwide.
You asked.
Okay, so let's try and diagnose this from a intermarket analysis perspective. Let's do a summary of the fundamentals. Okay, so fundamentals so far. Obviously, we already know the PMI data just came out quite strong, and the sterling has certainly rallied higher. So a rally in sterling is actually negative for the FTSE from my perspective. There are individuals out there, economists, etc., state that higher sterling is actually does bode well because it neutralizes the fear of inflation and obviously raises the cost of living, etc., etc. Obviously that theory certainly holds true from my perspective, especially with regards to Rolls-Royce this morning. Has been complaining about the higher sterling hurting its profits, okay, going forward. So I think that's the main concern, and also given the fact that a higher sterling or stronger economic data raises the fears of a rate increase. Obviously, if you increase cost of obviously money itself goes higher, which eventually hurts corporate profits going forward. Okay, so you've got a double whammy. So higher sterling hurting exports and higher costs obviously of financing hurting profits as well. So that doesn't bode well for the FTSE 100 going forward, especially given the fact that we're at 6,800 now. All the potentially bullish news that's out there, the euphoria, etc., anything that's bullish has certainly been factored into the markets at present. AstraZeneca obviously caused the FTSE to move higher. Then we had Shell moving the FTSE higher. So everything certainly has been baked into the cake, so to speak. Okay, from my perspective, anyway. Okay, so that's basically what I'm expecting with regards to the FTSE itself. So that's basically what I'm expecting. Okay, so that's the fundamental current. So obviously we've got tapering in the background. So obviously tapering is bearish because that alone causes the dollar to move higher. Again, hurts emerging markets, etc., etc. I mean, this morning I think the emerging markets have been under pressure regardless. I mean, we've got the Turkish index that's certainly is higher for the day, but still has been lackluster. Again, with the MICEX as well, has been lackluster. No real significant movements higher. So these obviously the emerging markets remain under pressure. Okay, then we have the Aussie into resistance now, the Kiwi dollar into resistance. USD JPY obviously has come under pressure, given the fact that we've got BOJ obviously not adding in any additional extra stimulus. So again, that's bearish. Okay, so you've got tapering, that's bearish. You've got BOJ not doing any more stimulus, that's bearish. You've got geopolitics still in the background, that's bearish with regards to Russia, Ukraine. Okay, then on top of that, we've had stronger economic data. UK GDP missed expectations, but still relatively strong. We've got obviously a stronger economic data out of the UK this morning, but again, these all cause concerns of interest rate rise, and that's basically the most important thing, because the economies are moving on Kool-Aid rather than actual fundamentals themselves. So can the economy sustain itself without the Kool-Aid, without the QE? No, it can't. Okay, as soon as you turn off those taps, the economy will dive, and that's the reason why we've got copper moving lower quite significantly. So copper has moved from 316 to 306 overnight. Why? Because of weaker Chinese data overnight. So again, that's another variable that signifies or indicates a move lower. So this is why the market's a bit of a conundrum at present. Okay, we've had certain isolated companies push the FTSE higher, so the likes of AstraZeneca, the likes of Shell. So these are companies that have certainly thrust the FTSE higher. So again, we'll have to take it every day as it comes. Okay, now, I am actually short the FTSE at present. I have a stop loss at 6818 region, 6816 region. So we'll see exactly whether or not my trade reacts well. So far, I'm currently plus 5 points for the week now. I was actually 110 points on Monday. It's been very hard to read this market after Monday, to be honest with you. Very strange price action, especially with regards to the actual Aussie USD, the Kiwi dollar. Obviously, the thrust higher there. The euro itself has been a tricky one to certainly grab hold of, given the fact that you've got Mr. Draghi talking against QE, but yet economic data indicates QE. So Adding the fact that the Fed's tapering as well, so this week a lot of fundamentals currents running under the running through. But at present, I've explained the bearish factors at play. No extra stimulus from BOJ, bearish. Tapering from the US, bearish. Stronger data signaling higher interest rates going forward, bearish. Stronger sterling hurting exports, bearish. And now let's have a look at the actual markets themselves. So obviously we've had two weak reports today from BG. You see their profits falling, and then we've had BSkyP's profits falling as well, so that's an additional negative factor. Adding the fact that there's a probe regarding AstraZeneca, obviously that's caused the FTSE to move higher. Now if there's a probe they're looking into, obviously the bid, then obviously that casts doubt and uncertainty. So again, that's a bearish variable, okay, bearish factor. So let's have a look at the index itself from a technical perspective now. Okay, so technically we are into horizontal resistance. This is a resistance zone here, so anywhere between the 6780 up to 6822 will be a resistance zone. Very hard for it to move higher from here from my perspective. So FTSE 250 has remained weak throughout, as you can see. No real thrust higher. Any thrust higher really comes into selling, and it remains in a pattern of lower lows and lower highs, so going back to test the 15600 from my perspective. The FTSE 350 again, horizontal resistance, as you can see here. We're into horizontal resistance, and therefore we move lower. Okay, so these are all factors that are certainly affecting it. Now if you look at the Dow Transportation Index, so it's been a bearish, well basically all the candles have been within the red candle. The double top has held so far, and this is a bear flag formation. So what does that indicate? We move lower. Expanding wedge pattern at the top of a market is bearish, so therefore we move lower. Okay, so that's the same as copper. Okay, so FTSE, also the Dow Jones, back into resistance, horizontal resistance. Do we move higher? No, there's no real catalyst, given the fact that we've had tapering and no extra BOJ. It doesn't really make sense. It's just a light volume float up phenomenon. Okay, so let's have a look at the S&P 500. S&P 500 again into horizontal resistance. Are we going to move a lot higher? No, we're not. There's no real catalyst for us to propel us higher. Okay, so especially with tapering going on in the background. Okay, so that's basically where we are at present. We can certainly have a look at the Russell as well, just to see if we can gauge anything from the Russell. The Russell itself, let's just have a look at a daily chart. Okay, so daily chart again, Russell, it has a HNS formation, so again bearish. Okay, so the 20 MA sloping sideways to down, and obviously losing momentum on the bull side, and given the fact that we've had tapering obviously implemented, we move lower. So it's very hard for me to see how the FTSE can move higher from here, given the technical patterns that exist on the US markets. Okay, adding the fact that you've got the euro moving higher up to 1.39 again, that will hurt European exports, that should hurt European equities, but yet the European equities are moving higher along with the DAX. So again, confusing times to a certain extent, but given the fact that it's a shortened week and certain markets are on holiday, and we've had a holiday here in the UK as well, there's another holiday today, obviously in Europe, so and given the fact that China was closed but only Japan is open, so again it's tricky, okay, especially with obviously central banks on tap. But from my perspective, bias remains bearish. I'll continue to hold bearish positions, and looking for the markets to move lower. So risk on, risk off, wax on, wax off. Actually, one more thing just before we finish, let's just quickly look at a 60-minute chart, which I've not showed in the FTSE before we go. I think this is quite important. Okay, the 60-minute chart itself, actually we'll leave that for now. I'll leave that for now. I will try and bring that up for you later on, because I don't have the actual correct charting package on this for now. So I'll leave that for now. Okay, folks, risk on, risk off, wax on, wax off. Goodbye now.